Well, it's been quite a while, but it is well worth the wait. We're talking about the latest memo that has come in from Howard Marks. Now, what Howard Marks of Oaktree Capital is saying in his latest memo as far as his Oaktree clients are concerned is extremely interesting. He notes, he's spoken about a whole range of topics, a whole variety of topics. And, what the main thing that he is focused on, number one, is the actual spread of the coronavirus. He's talking about the recovery. He also talks about whether the USA missed a trick in not reacting swiftly, both in terms of shutting down the economy and then in restarting the economy, and also giving clear communication as far as the citizens were concerned regarding taking adequate protection for themselves. He also talks about the federal rate. He talks about how the federal moves have actually helped shape up the economy, help the economy recover. He's spoken about how the economy that saw a record quarterly GDP decline, at this point of time is grappling for answers. But what he is saying is that at this point of time, investors must not feel that you're talking about both the economy as well as equity market being quite divergent. In fact, he comes up with very plausible reasons explaining the rally as far as equity markets are concerned. He speaks about the entire PE valuation as well as when you're talking about equity run. He believes that the bull run may yet continue, given the fact that you're talking about the equity rally and you're talking about PE valuations getting expanded in a era of extended low interest rates. Now, what you're looking at this point of time, number one, he starts off saying that the memo writing for the pandemic was almost one memo a week, but earlier he used to write one memo in just a quarter. So he's saying that still his own pace is relatively quicker compared to what it was earlier. Now you're comparing, he's talking about the healthcare. He believes that the USA has failed to fix the economy as well as the healthcare system itself. He believes that the USA has let a very good crisis go to waste, which typically it shouldn't have been done. He believes that the USA delayed as well as, made a mistake in terms of not asking the citizens to adequately protect themselves in terms of wearing sufficient masks. Now, what he is talking about is that he talks about a recovery and uses not a V-shaped or a U-shaped recovery, rather he uses the term a checkmark shaped recovery, and he believes that the US is currently going through a checkmark shaped recovery. What he's also saying is that in terms of the Fed moves and having a significant amount of low rates prevalent in the system, he believes that the Fed has actually done quite a few interesting moves, and he's listed out both the positives as well as the negatives. He believes that given the fact that interest rates are at significant lows, the value of investments of investment assets have been spurred. He also believes that the Fed as well as Treasury has said that they would go ahead and maintain high pumping as far as liquidity is concerned. He believes that the Fed has flooded the economy with markets with liquidity and other forms of support for both individuals as well as companies and institutions. On the other hand, he believes that the GDP quarterly setback, the COVID not being under control, and the second wave of infections is something that is compounding worries, and this he believes is something going forward could have a bit of an impact as far as markets are concerned. To sum it up, what he is saying is that he himself cannot understand how he calls the entire equity market rally as well as the federal moves and the spread of the virus quite opaque, and he himself is still grappling for answers.